And we're back here at Boom and Bust. I'm here with Dr. Pierre Siklos, a professor of economics at Wilfrid Laurier University. Please continue with your thought, Pierre.
I was just saying that the potential is for a retail type of central bank digital currency to have an interest payment associated with it. And as I was saying, in a world of higher inflation, especially if it lasts for a few more years, that might prove attractive to those of us who want to use cash. But as I said, central banks have made it very clear that for the time being, it's just a replacement for cash. It won't have any interest attached to it, in part because the worry is that it'll negatively affect the banking system, which, after all, makes a profit from the difference from the interest it earns from loans, and roughly, and the interest it pays to depositors. So that's the controversial aspect, but that's the big potential for retail central bank digital currencies in the future.
And in terms of other downsides, you've mentioned issues in your article that I read about privacy and overburdening the banking system. Maybe talk about those issues and any other issues.
Well, privacy is one that's it's not specifically associated with central bank digital currencies. Any form of digital transaction raises the privacy issue. And that's one that policymakers, not just central bankers, have to grapple with. Ultimately, it has to be the job of the government to set the rules and the central bank to follow those rules. So the central bank is more concerned with how to record these transactions, ensuring that there's as much anonymity in buying and selling using digital currency as there is with ordinary cash. And those are technically feasible things to do, but they're not straightforward, and they're very technical issues. As a result, once you bring in things like security and those types of issues, the role of the central bank is potentially impacted. So again, this will involve some legislation to make it clear where the responsibility of the central bank ends and where the responsibility of other agencies and the government begins, to ensure that the issue of privacy and those types of issues are separate from the mere sort of introduction of a digital currency and making sure it runs effectively. And then, of course, there's always the danger that at least economists talk about, which is that since you can create digital currencies very easily, if there's a need in future to put money directly into the economy, a digital currency is an easy way to do this. Now, the good news is that, or the bad news, depending on, of course, your position, is that the pandemic taught us that fiscal policy can act very quickly and deposit money into individuals' bank accounts very quickly. So this old problem that it takes fiscal policy a long time to get money into the hands of the public, that seems to have sort of dissipated. So this worry that central banks will be simply asked to just create digital current money and put it in everyone's bank account, that seems to have faded somewhat.
Gotcha. You've also talked about an inconvenience yield, and so maybe you can describe that and how that could be avoided.
Well, the inconvenience yield is a way of summarizing all those points that I raised earlier, which is that there is a potential loss of for example, privacy, and
Right.
That's an important issue. So all those types of issues, whether it's the security, what happens if there's a big meltdown, a digital meltdown, and the records are lost, just to give you an extreme example, how can you demonstrate that you had those digital dollars, if you like, those types of technical issues. So these are all risks, and with any risk, there's a cost associated with them, and that contributes to the negative side of the picture.
Gotcha. So would you say that there still is a way to go in terms of getting the proper regulation and supervision in place now? We're not quite there yet, or are we there now?
So, no, we're not there yet. In principle, some of the basic issues can be resolved, although anytime we raise the issue of privacy, for example, we know there are different sides to that debate. But there's, in the case of retail central bank digital currencies, there's another issue, which is the international dimension.
Right.
One of the things that, in principle, you should be able to do is to be able to hold digital money in other currencies, whether it's the euro or the US dollar. And in principle, it should be a lot cheaper to do it this way than to go to a bank and buy, the US dollars or the euro that you want for your holidays, and vice versa. And of course, another big business is the business of remittances.
Last time, we're going to take a brief break.